Good evening. It is Sunday, March 31st. Currently 11:49 New York local time. So, a couple things I just want to get out of the way. I'm pretty sure this is going to be on YouTube. So, my Discord, I have not been active too much, and that has been for a great reason. The markets this quarter, now that we're closing the quarter in almost an hour, have been quite fickle, and January, although January was a great month, I think February and March were a lot of just back and forth, nothing really amazing. And we've had some smaller ranges just in the past few weeks, in the past 2 to 3 weeks. So I'm hoping to see better delivery going into quarter two. Obviously not right away. I'm not expecting anything amazing tomorrow, but I am expecting some better delivery than what we've seen, especially in March and later February. So without further ado, let's get started. And this is April 1st to 5th weekly analysis, formulated and made by me. Nice little cute presentation. I went all out for this one. So I'm going to be looking at my notes while I do this, like always. The dollar monthly chart. So now that we have started a new quarter and a new month, obviously we have a new month opening. And just looking at the previous month's range, we have the previous month high and this previous month low. I think we're going to gravitate higher up into this monthly November fair value gap high right here. So around, I would say 105,500, but that's more of a longer term draw. That's my long-term outlook. Just in the next couple of weeks, and this will lend into S&P's analysis. I'll get into this after the dollar. I'd like to see the previous month's high booked and then up into this candle's high. So that's my monthly chart. That's kind of what I'm looking for. And this monthly Feb premium wick consequent encroachment should be treated as inversion. So in terms of discount arrays, you can see we had this order block here, this entire candle. I'm pretty sure this is December. And we traded into the opening and specifically the mean threshold, and then just booked a couple points below that, and then we've traded higher off of that. So I like this order block. Now if we're looking at everything on a fractal sense, typically it would trade up into here. So that is a very, very far away. So I'm really only looking for this high, and then in the next coming month or two, this previous month's high, which is not too far away from current market. The weekly chart, we have that Sunday 6 p.m. opening price, and then we have our two standard previous week lows. Sorry, not two standard. Our standard previous week low and our previous week high, which is paired and coupled with the previous month's high. And inside of currently we are trading inside of the November 13th to 17th, 2023 bearish fair value gap. So you can see we have traded into that and opened up inside of it also. After closing in it, went down, treated it as support, and then now we're trading inside of that. So my draw is obviously, like I said, that previous month high, which is coupled with now that previous week's high. And into the daily chart. So let's see. Right here, we had that inversion fair value gap after trading into a daily discount array. You can see we swept large pool of sell-side liquidity here below these lows. And then we've traded off of that. I really like this inversion fair value gap. The signature it presented here. Then we inverged inversed this bearish fair value gap, reclaimed the bullish fair value gap here from January 29th to February 2nd, and then in the process of doing so, we created this fair value gap on Friday, March 22nd, and we traded to the low, and since then we have traded higher. Change in the state of delivery here is what I'm anticipating, and on the lower time frame you'll see why I like this. But on a daily chart, I would like to see this, and this is my most favorable scenario, is for this to trade inside of this, respecting the low of this candle, and then trading higher. So I don't necessarily want to see a return back into this fair value gap from the March 22nd candle, but if it happens, then from there we'll have to see. 4-hour chart, just take a look at it. This is like a nice little dealing range that we're working inside of, from this high to this low. So you can throw up some gradients on that and then grade those gradients and just really get in depth into it. And then the hourly chart, as you can see, I have each day divided. So basically Monday's opening, Tuesdays, Wednesday, Thursday, and obviously there's no Friday trading, so we have the Sunday opening, Monday, and so on. And I'm just going to read directly from my notes because I think I'm running short on time for this recording, so I don't want to waste too much time. But what I have written here is I want to see signatures of support at the daily Monday, March 25th order block, like I said, this one right here. Otherwise, failure to hold that level, I believe we sweep the sell side liquidity or relative equal lows below 104.305. So that is right here. So that's Thursday's low right there, which is not annotated on the chart, but resides at Thursday's low day, like I said. I like the buy side above previous month high and previous week high. Right here, that purple line, I really like that buy side at 104.727. All in all, that gives a nice clear short-term dealing range inside a one-day look back, basically derived from Thursday's daily candle. So Thursday's high and Thursday's low, you throw up a dealing range on that, and inside the Sunday's opening, we have opened near equilibrium. So that's something I like. And just looking back at this, I noticed I forgot to mark the new week opening gap, but the new week opening gap is also in confluence with the equilibrium of that Thursday's high and low dealing range. And if you were to look at this order block right here, that is a nice discount. So like I said, I favor the buy side, but failure to hold the daily Monday, March 25th bullish order block would open up the likeliness to trade lower during the first half of the week into the 104.305 sell side liquidity down here, and possibly, very possible, the 104.216 sell side liquidity down here, reclaiming the 1 hour 1 a.m. bullish order block, simultaneously sweeping a large sell side pull inside discount relative to the previous weekly candles range from high to low. So what I'm talking about is this low and this high. Measure that out. Equilibrium is halfway. That is that sell side that at 104.216 that I mentioned. If we fail to hold this order block, and if we trade into the sell side, then it's possible that we go as low as here and reclaim this blue line, which is the 1 hour 1 a.m. bullish order block. So it's possible it goes down there, sweeps that sell side, and then starts trading higher. But like I said, my ideal scenario for risk off would be trading inside this bullish order block and respecting the daily low of that candle. So yeah, that is my dollar index analysis, and I'm very sorry for the laptop noise. That's mostly why I haven't been going live on YouTube, just because I know it's really annoying, but I'm just kind of working with it right now. I've tried to fix it, opening up my laptop and all. but it hasn't really worked. So I think my next move is just to get a new PC. So that will hopefully happen soon. I'm looking for a nice PC to last me the next 5 years.